Hi, my name is Danny Fitzgerald. I'm the Associate Regional Director of the San Diego and Imperial Small Business Development Center. This is our on-demand webinar talking about the COVID-19 crisis and small business capital. The focus of this particular webinar is about the Paycheck Protection Program. This is an updated version, so this is being recorded on April 14th, 2020. I'm going to talk a bit about some of the general information about the program, and then some specific information, even some of the records that you'll want to be retaining, which will be best for you to be able to save after you get the loan itself. I'll touch briefly on the EIDL program, but we do have another on-demand webinar that still walks you through what that particular process is and the information that you'll need for that. So first, a little bit about us at the Small Business Development Center. We're a resource partner of the U.S. Small Business Administration, as well as the California Governor's Office of Business and Economic Development. We are a number of different programs around the region. The primary programs at Southwestern College, but we have programs in many different locations and many different partners throughout the region. And we provide free one-on-one business advice, mainly done through one-on-one business counseling, but also through webinars that are recorded, such as this, live webinars that we've been doing ever since the crisis started. And eventually we will get back to doing live one-on-one trainings. We've been around in San Diego for over 30 years to assisting small businesses to start and grow. And now we're really here to be able to help you during this particular crisis. We have a wide array of expertise. We have over 80 expert business advisors who are working hard day in, day out to help small businesses succeed and also be able to survive this particular crisis. So what is there today? Today, there are, of course, still primarily the SBA disaster loans that occur through the federal program. One is the Economic Injury Disaster Loan, which there's a separate webinar that talks up more about that in detail. But there's also the Paycheck Protection Program, which is what this particular webinar will focus on and be the primary point of emphasis. Of course, there's other benefits that are out there. Unemployment insurance for furloughed staff. There's also the Pandemic Unemployment Program that exists. There's sales tax deferment that the governor of California certainly has implemented. Our tax deadlines have been moved to July 15th, and the California State Loan Guarantee has kicked in, and there's a much higher guarantee for that, and that's what a number of the different microloans and the nonprofit lenders are going to be taking advantage of. Of course, there's also city and county programs as well. So what are the things hopefully you've done by now? I'm only going to touch quickly on these because hopefully you've done these. That's talk to your lender. If you have an existing SBA loan, make sure you talk to your lender, get that deferment in place for up to 6 months. You do not have to pay principal or interest. The bank's going to continue to get that interest from the Small Business Administration, so they'll continue to be getting paid. Other loans, if you have them, they're requiring a restructure, please contact us. We'll help you walk through what that restructure may need to look like. Hopefully you're able to just get a deferral on those as well. And of course, if you have a landlord, make sure you've contacted them and talked to them about your rent delays, and I'm going to continue to have those conversations. So for all the programs, every program, the ones that this webinar is going to talk about, any of them, make sure you have your financials in order. That's our number one of advice we've had since day one, and it's super important for these programs, especially as new programs come online that may be local programs that may quickly get subscribed. So make sure you have your 2019 financials in order. That includes your total gross sales, that includes all your operating expenses, that includes all the payroll that you've had, and as well as your 2020 financials to date, particularly for January and February, have those in order. That's going to allow you to document a negative cause and effect because of this particular crisis. And that's what's really going to help you get through this process. And then that's going to allow you to project the financial impact, which won't matter much for the PPP, but will matter for other programs, in particular the Economic Injury Disaster Loan. For the PPP, you're going to want to make sure you have all your monthly payroll expenses. So get those from 2019 from your payroll provider. Make sure you have those at your, at your home computer, so that way you have that information ready for you. So the Paycheck Protection Program. This program is brand spanking new. It is less than 2.5 weeks old. It was signed into law and by the president and passed by Congress just right at the end of March. And a week later, it started rolling out. And the number one thing that this is a loan directly from a bank or another lender. And so you should make sure you reach out to your bank if they offer the program. If not, this is where you can find a lender at this page. Number one thing is only use lenders that are authorized by the SBA to do this program. Many more lenders are coming online. If you have a question about a particular lender, if you're not sure if they're SBA authorized, please let us know at the SBDC. We'll find out if they're authorized or not. We obviously are keeping up to date on that information, but also we'll be able to check with the Small Business Administration, because we do know that there are scams out there, people that are trying to collect personal information and financial information that could be damaging to you. So many lenders are coming online, many more are coming online, even other quality lenders, that are going, doing this from a unique approach, such as PayPal, and as well as another online lender called Lendistry, but also nonprofit lenders locally like CDC Small Business Finance are working with their customers, as well as a number of different small community banks that are coming online to be able to offer this program. So you're eligible for this program if you are a small business or a nonprofit, 501c3, that's the only type of nonprofit, and if you are in operation on or prior to February 15th, 2020. That is a very important cutoff date. That's in statute as to when that particular date is, and that's what you must have. And as well, that you've paid employees or paid yourself or as the owner via wage or an owner draw. And if you paid yourself, that you're able to demonstrate that you've done that. And so you're also, so if you're just the owner, if you're an independent contractor or sole proprietor, you are also eligible for this. And I'm going to talk in detail a little bit about how that will look. But as long as you are in operation prior to February 15th, 2020, you are eligible for this program. And we'll talk about how you're able to take advantage of that and really be able to let that work. So it's working under the SBA 7A program, but they're expanding that. And so that's how they have the SBA authorizations for these particular amounts. So a couple of timeframes on this. The loan application itself is only available, so there's a clock ticking that you have through June 30th of 2020. Many people have applied already to date, but we know that a lot of the smaller businesses still need to apply, and so in particular, a lot of independent contractors. And so a lot of this is to continue to assist you to make sure you're able to do it. Of course, the loan amount can't exceed $10 million, but for many of the businesses, that's going to be a rare exception. The vast majority of these loans are under $150,000. Why? Because the loan amount is based on a simple formula. It's 2.5 times your average monthly payroll. That's how it's done. I'll talk about what's included with that, but it's a fully loaded payroll. It's the state mandated payroll taxes, not federal. Insurance, that includes workers' comp, your group health insurance, that's employer paid, as well as retirement, any sort of that you pay as the employer. So the one thing that's excluded, which I'll talk about, is payroll in excess of $100,000 per employee. So up to $100,000 is included. So $8,333 per month is included. Why this loan is fantastic is because it's forgivable. I'll talk about how that forgivability can work, but it's basically on demonstrated payroll, rent, mortgage interest, or utility costs made during an 8-week period following the disbursement of the loan. So there's a website summarizing the PPP, but that's really what the meat of it is about. Another big common question we get is, what can I apply also for the economic injury disaster loan and the PPP? Our recommendation is absolutely yes, you can, and do so. And then as long as that's giving you additional options. But because this loan's forgivable, use these funds on these allowable expenses first. That's what you want to make sure that you're doing. Use those funds on payroll, rent, and utilities first. Then there's plenty of other expenses that you're going to need to cover with your EIDL loan. That's what's going to be able to get the bridge until the world starts, the economy starts coming back online. So what information do you need to collect? What is included in that payroll calculation? So it's the payroll records from January 1st, 2019 through January 31st, 2020, or really mainly your 2019. That includes all W-2 wages paid, even commissions and cash tips. Only include the state payroll taxes. The federal employer paid FICA, Medicare, that's excluded. So that would be pretty much your state unemployment insurance. Also your payment for vacation, medical, sick, or any other type of leave. The group health insurance, group retirement, the employer paid portion, and that also includes owners and workers' compensation. The owner compensation would also be included this in the form of a draw or net profit. And on the next slide, I'll talk about how that's calculated. The exclusions, 2 exclusions. One I already talked about, which is the compensation over $100,000 per year. So again, if someone makes $120,000 per year, you can't claim $10,000 per month. You can only claim $8,333 per month. As well as the other one is employees whose principal residence is outside the US. Here in San Diego and Imperial, that's important because we know that there's a number of folks that do live in Baja that may not be eligible for this program. So this is the new information about the sole proprietorship and really how that's going to work. And so this is how you can really apply. So if you're a partnership and you take draws, you need to apply under one, and you would basically divide it by the percentage of ownership for your partnership. So this is what it is. It's pretty much as you want to look at this. This is straight from the regulations. So from your 2019 Schedule C, if you have not completed it, complete it because it's going to be required. And so you're going to take that, complete it, and get to line 31, the net profit amount. And so that's going to get you that particular payment that's your owner draw, that net profit. Then you would, if it's over 100,000, reduce it to 100,000, divide it by 12, then multiply it by 2.5. That's really what your PPP loan amount is, less whatever advance you have received from your economic injury disaster loan. If you've not received your advance but applied for it, it will be based on the total number of employees you have. So if you're an independent contractor, that's one, so that's $1,000. If you're a sole proprietor that has employees, let's say, for example, it's you and 4 employees, and that makes your average monthly payroll $10,000. So you would get an idle advance of $5,000. What you would do is you would be reducing that down by that 25,000 by that 5,000, so your PPP would be $20,000. And so that's really how you're going to be calculating. So no matter what, if you have not filed your 2019 tax return with the IRS, you still need to complete that Schedule C. Doesn't mean you have to file it. You need it completed to be able to substantiate what your loan is. That's what the lender will most likely require. And so you're going to want to have that, plus any sort of demonstration that you're self-employed, invoice, a book of business, anything, that type of demonstration, as well as the way in which you're paying yourself. So be able to demonstrate how you were paying yourself prior to February 15th, 2020. Obviously, if you're able to show invoices from 2019, or if you have your tax records from 2018, that's also going to help you substantiate that as well. Then you get into the application itself. The application is super simple. This is what the SBA has put out, but lenders are doing this all online. So theirs are going to look different, but this does tell you the information that you're going to need to have. So you are identifying the type of entity you are. If you're a C Corp, S Corp, or LLC, you'd indicate that. If you have a legal partnership, you'll want to indicate that. Make sure you know what the ownership split is. That's very, very important. Then if you're a sole proprietor, independent contractor, or self-employed, you check those boxes as well. Make sure you have this information. If you have an EIN, an FEIN from the IRS, you're going to want to make sure that you have that information and you put that in here along with that information. So that you will need. Again, the calculation, and make sure you check all 3 of those boxes, just so we'll have that flexibility in place. Then you will also complete this basic information again with the ownership. Only the owners of 20% or more would be part of that. So that's the only amount that you'll include. So if someone owns less than 20%, you wouldn't include them in here. But if it's a partnership and they're paid 10% of that, you're going to want to have that because that's going to be part of the calculation on exactly how that's working. Then there's a whole series of certifications. It's very important that all these certifications, you read them and you complete them accurately and honestly. And so that's very, very important that you're doing that, because you're going to have to certify under perjury that all the information is true and correct. So a couple of things on there I want to highlight is, of course, this is that actual certification that you are indicating that information, that they will be, so because this is a federal loan, and so they want to make sure that you're completing everything true and correct. One of those things that I've had questions for, so there's 2. One is, of course, that you're in operation prior to February 15th, and you've been impacted by, of course, the COVID-19 crisis. Yes, we know almost every business has, but it's almost every business. Not all businesses have. And so if you've not been impacted, obviously you're not eligible for this particular loan. After you complete the loan, what's important is then kind of some timing issues. So a couple of things. You'll complete the application with your bank or a lender. They receive that. Make sure you get the receipt that they've received that and you have some sort of confirmation. then they will process that. What they have to do is they have to put information into their system as well as into the SBA system. Once the SBA system, then that has an automatic processing, and then it comes back. That's taking a day or a few business days, depending on each bank and the SBA's particular process. Then the bank will have an approval of that loan and give you an approval of that loan. They then have to provide you the funds no less than 10 calendar days after the approval. That's important because the moment you get the money is when your 8-week time frame for forgivability starts. 8-week time frame starts the day you get the money. You have to spend at least 75% of those funds on payroll expenses. So make sure once you get that approval, if you furloughed or laid off any of your employees and need to rehire them, so that way you can keep them on the payroll, because that's the intent of this program. The intent of this program is twofold. From the federal government side is that employees are not on unemployment insurance and you're paying them as their employer. And number two is that then you get to retain qualified, trained employees that you don't have to then retrain when your business reopens. So that's really what it is. So if you furloughed your employees, the moment you get that approval, begin that rehire process, because that 8-week time frame, not 2 months, 8 weeks only, begins at that time frame. So at least 75% has to be on those allowable payroll expenses that I talked about on a previous slide, and no more than 25% during that same 8-week time frame. So do think of 2 rent payments, monthly rent payments, or your mortgage interest payments and your utility payments, like such as your power or gas. That would be what you would have in there. So make sure you save detailed records of those expenses, because you will have to provide those to the lender for forgivability, and those are subject to audit or review from the federal government. So you're going to want to make sure you have a very quality record retention on your payroll reports, your bank statements, canceled checks, invoices, etc. When in doubt, over collect and over save your information. And certainly we'll work with you to kind of show you what that needs to be done. So for that, just a couple of quick examples what that might look like. You might have a particular payroll report that looks like this, or of course your payroll tax summary as well. That also may be some of that information that you have. So save all of those records, save your bank statement showing you actually paid your employees the direct deposits or canceled checks, and all of that type of information. That's going to be very, very important for you. Last but not least is you can use us for help and review. As you're going through that application process, if you have questions on completing your Schedule C, if you're an independent contractor, what your net profit necessarily would be, schedule an appointment with an SBDC advisor. We're here to help. Basically, you go to our website again, where you click here and you click sign up as a client, and you'll get an appointment scheduled. That's the best way to do it, because right now we're working online, and so that's really the best way to reach us. Quickly, I'm going to talk about, just as a comparison, the economic injury disaster loan, which is a loan up to $2 million. The only thing I really want to talk about is mainly this here, that this is a loan that comes directly from the U.S. Treasury. And this is the loan that also has the up to $10,000 advance. That advance is calculated based upon the number of employees you claimed on your simplified application, which would have been completed at the COVID-19 relief.sba.gov. So the other thing is for all of these loans, it's very important, there's no cost to apply. So do not be paying somebody extra to apply. We're here to assist you for free. So we hope that this has been helpful for you. Again, we're the San Diego and Imperial Small Business Development Center. We're a resource partner of the Small Business Administration, as well as the state of California's Governor's Office of Business and Economic Development. So use us. We're here to help. We're here to help you get through this time, help you take advantage of these great programs the federal government has. Thank you.